all-share index looks set to open to upbeat global markets this morning, with sentiment getting a boost from news that gas flows from Russia will resume as scheduled on Thursday through a reduced capacity. Jimmy Moyaha, independent analyst, joins us now to talk on these and other business news. Jimmy, very good morning to you. Thank you for your time. Give us a sense of how the markets have opened in early trade.
Good morning, Paul. We've seen a bullish open in early trade. We're seeing the top 40s trading up close towards the 62,000 points mark, up almost 1%. We're seeing general positive sentiment around equity markets around the world as well. There is, of course, for South Africa, the inflation numbers that are coming out today ahead of the interest rate announcement tomorrow that we expect to see. But we're seeing price sort of stabilizing on certain spaces. We're seeing oil back above $100 a barrel. We're seeing gold teetering close to $1,700 an ounce. And we're seeing just in general sentiment reflecting that there might be a bit more positivity in the market than we've seen in the last couple of weeks. And there might be a little less volatility just as we start the Wednesday.
And Nedbank has flagged profit growth of about a quarter for its half year to end June. Help us make sense of those numbers.
So Nedbank will be releasing those official numbers for the quarter ended June around the 10th of August, but they have just given guidance that they're expecting earnings per share and headline earnings per share to be up, expecting earnings per share to be up some 28 to 33 odd percent, and then headline earnings per share between 23 and 28%. But as I said, when we get those results on the 10th of August, we'll know better what the numbers look like there.
Footwear retailer on the other end, Studio 88, is now officially part of the Mr. Price stable. Talk us through the details here. What does it mean for both retailers?
Well, the Competition Tribunal sort of gave the go-ahead on the deal. We know that they'd announced this deal around April of this year. This is just the latest in Mr. Price's acquisition trail. I mean, we remember they acquired Power Fashion. They've also acquired Yappy Chef as well in the past for about 400 million there. So this deal looks to be about 3.3 billion rand. No objections from the Competition Tribunal. They've cited that they don't see a problem from a competition perspective, but there's also been no public objections to the acquisition. So it looks like the acquisition has got the green light to go ahead. And this just adds to Mr. Price's breadth of product and ability to service various markets and various demographics. So for them, this is a really good strategic acquisition for Studio 88. That allows them to leverage off of a bigger parent company, the size of Mr. Price, that's competing across various spaces and in various markets. And all in all, it looks like it's going to be a good acquisition for Mr. Price. They're very positive about it, and they're feeling that they're going to be able to unlock value from it and add to their balance sheet.
Yeah. Netflix only lost around 970,000 subscribers during the second quarter, a smaller loss than the 2 million it had projected last quarter. What do these numbers look like?
Yeah, so Netflix losing subscribers is not the first time this has happened. It's actually the second time. They've been losing subscribers for since the last quarter reporting period. They still have about 220 million subscribers around the world. They're still generating quite a bit of revenue. I mean, their quarterly revenue for this past quarter was sitting at about $8.9 billion. So it's still up about 8.6% year on year. So they're still, relatively speaking, doing well. But you are seeing that the growing concern around competition is starting to impact them quite negatively. We know we've got guys like HBO coming into the space, Apple TV coming into the space, Disney Plus in South Africa pricing lower than Netflix on some of their packages as well. But Netflix from their side said that they're sort of happy that the decline wasn't as much as they expected it to be, but they are forecasting that competition will continue to grow tougher. They have enjoyed, the lion's share of the market for the longest time, and so with an increase in competition, it is likely, and you can expect that there will be a decrease in their subscriber base as people sort of try out alternatives to what they've been offering up to now.
Very well. Thank you so much for your time. Very thorough analysis. Jimmy Moyaha, independent analyst, talking to us about the very latest in the world of business. Now,